So today we are going to talk about the risk management. As always, that's the primary focus of every webcast, to discover what are the techniques and instruments that you need to utilize to maximize the return and to minimize the risk in automated trading, in smart trading, which basically implies trading with different order types like the stop limit, stop market, setting multiple take profits, trading stop loss. There are lots of them, and we will cover all of them and how you can combine these orders with one another to create your golden strategy in smart trading. And we will also talk about the Hodl, because it's the simplest strategy, it's the most insecure strategy, but at the same time it can bring you the biggest return. So we will talk about the side effects and what it takes to develop the golden strategy that suits you the most. And that's thanks to the Bitsgap instruments, because we have automation, we have smart trading, and we have this opportunity to manage your investment portfolio, basically for Hodl purposes. So that's what we will discuss today: automation, smart trade, and Hodl. And we will discuss them in terms of the risk control, complexity, and basically risk to reward ratio. So let's jump straight. Let's go to Bitsgap. Let me just quickly open the page. I hope you won't see my email. No, it's good. So as you see, I go to the trading section. So we're gonna start here. So this is basically where I have smart trading. This is where I have all these order types that I can use to create golden strategies. So what I think about the smart trading is basically here you have the best control over the risk, because you are the one who decides where your take profit is gonna be, and you can make your stop loss trading, which basically means that it will follow the price action as the market rises. Okay, so it's all about the flexibility that smart trading really offers. Whereas in automated trading, this is where you have this is where you get daily returns, and you don't have to spend hours in front of the computer. Basically, you just assign the job for the bot, for the robots to do. So they just look for these opportunities to buy low and sell high intraday. And depending on your goals, you can be, for example, you are willing to accumulate returns in BNB because you anticipate that in the nearest future the value of BNB, let's actually open the chart. You see, you anticipate that the value of BNB relative to USDT is gonna grow. Then trading automated bots, here you have many opportunities to accumulate the BNB. So for example, you have Bitcoin trading to BNB. No, actually not on this one. Where is this? It should be actually here. Let's switch to the real account. Should be BTC, BN. Okay, that's weird because there should be. Okay, let's find any random one which is trading to BNB. I think Cardano should be trading to BNB, and I need to switch to Binance Exchange real quick. So here it is. So for example, you have Cardano in your portfolio, and by the way, the price action looks bad right now. You see it is falling, but though you see these cases when the price really appreciated, Cardano appreciated relative to BNB. So in this period, you could use your Cardano to accumulate BNBs in your portfolio. But we will talk about this high yield strategy and what are the risks behind this strategy in just 15 minutes. But now let's focus on the smart trading. So once again, in smart trading, you have the best control over the risk. And here you have quite many tools to play with to create your ultimate strategy. So the easiest one would be basically setting one take profit and just setting the stop loss. So for example, you want to buy, in this case that's 1 inch to USDT. So let's say you want to buy 1 inch, let's say 10% at the price of maybe 4.2. So you think that the price should drop a bit down to 4.2, somewhere in this zone in this case. And this is where you want to enter the market. Okay, right now you don't want to, and that's why you use the limit one, because this allows you to enter the market under special conditions. So, and the condition here is that the price should reach the price of 4.2 in this case, and only then the system will open long position. So you set the take profit because you need this take profit to secure your returns. Because imagine that you are away from the laptop, maybe you are asleep right now, wherever. You know that the cryptocurrency market is trading every single day. It has no days off. So that's why the price action is an everlasting process here. So you won't see any gaps that you see on Forex market or the stocks market because they have these 2 days off. Well, anyway, the point is that when you have the take profit, this is the tool you use to secure your returns. Because, for example, you want to lock in returns as the price goes higher, and let's say as it goes up by 10%, this is where you want to sell, let's say 40%. Okay, and the rest exposure is gonna be 60% left in this case. And you set the stop loss because you need the stop loss to have a control over the risk. So using the stop loss, you minimize the loss. So that means that let's say below this point, and let's set it exactly at this price level at 4.06. okay, so I think that once I enter the market over here, and if the price unfortunately falls, and if it falls to that point, this is where I want the trading to stop, because if it falls to that point, I think that it will continue the downfall. So I don't want to bear this entire downfall. And that's why I want to minimize the risk. And that's what you do with the stop loss in your trading. And let's go back a bit. Let's refresh, remove all the drawings. So this is the simplest strategy. And let's actually buy it. Okay. It's 40. Okay, let it be 60, whatever. So anyway, so that's actually strange. Maybe let's set a few more. Honestly, I don't see the problem here, but for some reason it just doesn't want to trade. Okay, 40%. Yeah, okay, now it works. So since we have multiple take profits, you must make sure that you have 100% selected. Okay, so you see now the order is pending. So as soon as the price reaches this price level, it will initiate the trade, and you will see your first take profit exactly where we set it. And where we set it, it's 4.62. So you will see it. Yeah, actually you already see it as I click on the open orders. So this is your current strategy, and you can actually drag the line if you want to change the take profit zone, or you can do this manually right over here. Moreover, you can split the risk by having 5 take profits. So for example, the split is 20, 40, and then the rest 20%. as the price goes higher, it just locks in the return. Okay, safe. So now you see these take profits, and the cool thing is that here at Bitsgap you can drag the take profit right on the chart. You see, because sometimes visually you find better price points where you want your take profit to be set. Okay, so that's why we have this opportunity to drag the line. It's pretty convenient. It literally takes you like a few seconds to do. But anyway, you can also do this manually every time. You can also switch off the take profit and stop loss if you want, but you say if you are the beginner trader, or even if you are the professional trader, then you are well aware that in trading what really matters is the risk management, and that's it. So for example, you can have 3 winning trades in a row that can cover next 5 losing trades. Okay, so that's the point here, and the key thing is to set your profit target higher than the risk. So only take the risk if it is lower than the potential profit that you can get from this trade opportunity. Otherwise, it literally makes no sense to enter the market if your risk is higher than the reward you can get from this trade. Okay, so that's why, and we're actually about to release this article related to these exact 3 golden strategies in cryptocurrency trading that I just made yesterday. So you will find the exact ratios that you can use in smart trading, in automation, and in Hodl to create your ultimate portfolio that will bring you steady returns, having the lowest risk possible in crypto. Okay, so the thing here is that your risk to return ratio should be higher than 2. So once you divide the potential profit by the risk that you set, it's, well, from my practical experience, yeah, and as a rule of thumb, it should be bigger than 2. Okay, so if you divide this number by this one, you see it's now around 5, right? So that means that for 1% of the risk, you get 5% of the return. That's the point here. And yeah, and since we have this opportunity to set multiple take profits, that means that you can maximize your returns. Because if you would have only one take profit, let's say here at the price of 5, then it would just get rid of your position right at this price level. But since you have multiple take profits, that means that it spreads the risk, and at the same time it maximizes the return, because you see we have take profits at a higher price, and by the time it triggers our first 2 take profits, our position is going to be less than the one we had at the very beginning of this trade. So we are now having the position 40%. Well, let's see what's the decomposition here. So yeah, that's 20. So yeah, your risk exposure is going to be only 60% in the market. Okay, so that's the point. As the price goes higher, you get your realized return, and at the same time you reduce your risk exposure. So that's the cool thing about having multiple take profits and the stop loss. Okay, so yeah, the simplest strategy in smart trading is to have take profit. You can have just one, or you can have multiple. That's the opportunity at Bitsgap. And the stop loss, that's the most important, the easiest one, risk management tool that you should use in trading, in automated trading, in smart trading. So this is basically a must in order to have the best control over the risk, because once again, the risk is the only thing that matters in trading, and you don't have to be the Nostradamus. You don't have to, I mean, it's not about making right price predictions what defines the success. the success is defined by the adequate risk management. And once again, you can have 3 winning trades in a row that can cover 5, 10 next losing trades. And that's the only thing that matters. The net profit should be positive here. And thanks to these metrics that we provide you with, that's the projected profit and the projected loss, you can always calculate the risk to return ratio to see whether or not it makes sense to enter this trade or not, whether the risk is higher relative to the reward that you take or not. So that's the biggest question you should always ask yourself, if it's worth it to enter the market at current conditions. Okay, so the next thing that we have is basically market buy and sell. That's the easiest one. It's just enter the market straight away. And for the market buy or market sell order, you always pay the highest fee on the exchange, because that's the first priority. Basically, there is a list of orders on the exchange, and there is the liquidation for futures market. That's actually the first priority, to be honest. The second priority is market buy or market sell orders, and for that you pay the highest fee. And of course, in liquidation, you also pay the highest fee. And the third priority is going to be limit buy and limit sell orders. Those limit buy and sell orders you see in the order book. So these are basically the market makers. And that's why, as you are the market maker, that means that you create the supply and the demand, which is here on the order book. For that, you pay the lowest fee as you enter the market or exit the market. But for the market and for the liquidation, that's the first priority always. Here you are the market taker in this case, and that's why you pay the highest fee. So always keep that in mind, because sometimes you can trade big size trades, like maybe $50,000 worth trade. So the fee that you pay, it can make the difference whether you enter with the market buy or limit buy order. So always remember about the fee. So yeah, that's what it takes to enter the market with the market buy or sell order. The stop limit one is the next level in smart trading, because here you have this new section known as the stop. So let me just close this trade, because I don't want to see this. Well, actually I could switch to another trade, maybe AVA to BNB. No, maybe let's switch back to yeah, this one good. So the thing about the stop limit is that you have this thing as the stop price, also known as the conditional price. Basically, with this stop limit buy order, you can now enter the market at the higher price. Because let's say if you want to enter the market with limit buy order, but when the price goes higher, this would be impossible with the limit buy order, because it would just buy at the current price. And let me actually show you this. So for example, I want to enter the market. I want to enter like long position as soon as the market reaches this blue line over here. Okay, so that's my vision here, that I have more confidence in long position only if the price rises to that point, because I believe as it rises to that point that it will go even higher. So that's my condition here that I set for myself. So that's why I want to enter the market at this price. So as I set it at 440 with limit buy order, so let's click on buy, you will notice that it will buy it at the current price. You see, that's the thing about the limit buy order. It always buys at the lowest price possible. So with the stop limit, the game changes. So here you have this stop price, and let's set it at 440. So that means now, as you have this stop price, as soon as the market price reaches this stop price, which is 440, only then the system will plot a limit buy order. So for example, you set your stop as 440, and let's say your limit buy is going to be at 439. Okay, so let's zoom in the chart. So I will show you this price. Okay, so that's over here. Let's make it orange. So the thing is, let's remove my beautiful drawings. So once the price hits the 440 stop price, it will automatically open a limit buy order at the price of 439, and only if the price falls to that price level, it will trigger this limit buy order and you will enter the market with a long position in this case. Okay, you can also set it at 440, so that means that your limit buy is exactly where your stop price is. So that basically means that as it reaches the 440, it will open the buy position in this case. So that's why this stop limit smart trade order is the next level trade, because here you have the opportunity to set the conditional price, and this conditional price can be based on your technical analysis, the fundamental analysis, wherever you prefer to use when it comes to the analysis of the market sentiment. So for example, I prefer to use the volume profile. Yeah, let's visible range here, because in using the volume profile I can see where the biggest interest, like at which price level there was the biggest interest in the market. So for which price level sellers and buyers were fighting the most, and you will find that this point exactly, like in most cases, corresponds to the support and resistance lines. And basically if the price now is trading above this line, that means that we are having a bullish sentiment, and if the price falls to that point and it breaches it, that means that more likely sellers are about to revert the market and it will fall to the next point where we had the highest pressure from the both sellers and buyers. Okay, but that's the explanation of the volume profile in brief. Okay, and it's just the example of the indicator that you can use as a sort of proxy to figure out where you want to enter or exit the market. Okay, so that's why we also have another tools, like for example moving averages. Why not moving average? Let's use the exponential. Let's actually use two. Okay, oh sorry, actually I already had them all, so let's remove some of them. Yeah, you see, let's switch to 1 hour maybe. So you can also use the moving average as your primary indicator to see where you want to enter or exit the market, and using this indicator together with the stop limit order, you can always enter the market whenever you believe it will downfall or appreciate further. Okay, so for example, let me just explain a random logic that you might have once trading the cryptocurrency market. So for example, you anticipate that the market will enter the strongest rally once it breaches this previous higher high at the price of 457. So you believe once it breaches this price level, it may go up to this previous highest high point, which is at the price of 580. So you want to enter your long position only at the breakout of this price level here. So that's why you use this stop limit, and you set it at 464, and here you set the limit, let's say at 464 as well. So only then you will enter the market with your limit buy order. Okay, so that's the thing that makes the stop limit different from an ordinary limit buy or limit sell order. Okay, so same applies to the stop limit sell. Okay, it's just the conditional price that you set below the current market price. So yeah, that's I mean, there's such a variety of patterns that we can use here to enter the market, and thanks to this amount of order types that we have at our disposal, we can create so many different strategies that can suit your goals and your risk management mantra. Okay, so yeah, and once again, thanks to this projected profit and projected loss, you can always estimate the risk to return ratio, which in my opinion is the key factor of success. To have like to enter the market only when the reward, like the potential reward from this trade, is bigger than the risk that you take. Okay, if the risk is high, then it literally makes no sense. It's just too risky. Okay, and yeah, that's what it takes to be profitable in smart trade mode. Just discover which strategy suits you the most. Maybe you need just to take profits and stop loss. Maybe you need to take profits with a stop loss, but with the trailing stop loss. That's another trick here. Okay, and maybe you are better at trading with, like, enter the market with a market buy or market sell order. Well, sell applies basically to the futures because you can short sell the market. Here, market sell is just you basically sell the crypto and nothing else happens here. But if you are trading the futures market, then you can also market sell any crypto on your futures account, which is basically the short sell position. It basically implies trading the opposite direction, like making returns on the downfall. That's what short selling is all about. But yeah, I mean, you have market buy, stop limit. Just play with these orders. As now you understand the logic behind these order types, you can come up with your unique strategies and find which ones suit you the most. Okay, so that's the key to success when it comes to smart trading. So the next golden strategy that you have in crypto is automation. And there are actually only few platforms that made powerful robots, and Bitsgap is certainly the one outstanding here, because you have everything. You have the demo mode to trade in a risk-free mode, where basically you have virtual money. So you see, these are my virtual money, and that means that you just risk the virtual money. Okay, and using this virtual money, you can create as many strategies as you want until you find the best one for you, and you will use this best one on your real account. Okay, that's the key to success, like one of the key parameters in order to come to your success. The next thing is that at Bitsgap we have the backtest mode. And in the backtest mode, you can literally stress test any strategy, like the like the configuration that you set here, like the grid levels, the grid step, the trading range that you set. You can backtest how this configuration would have performed if you would have launched this board, let's say 10 days ago. And you do it like this. So you go, today is the 1st of April, 10 days. Okay, let's set it at 23rd. That's whatever, exactly 10 days. So you say with this trading configuration that we set here on the chart, and like the system would make you 2.64% in quote currency. Yes, the thing is that the backtest system does not take into account the value change of the base currency. And if it would take the value of the base currency, then you would see the result slightly higher, because notice that the price has appreciated during this period. So you would see not 2.64, but something around maybe 7% or maybe 8%. Right now, we just backtest strategies in the return generated in the quote currency. So that's the return that the bot makes. Okay. The value of Aave is not taken here into account. That's what you make in USDT relative to your investment. Let me show you some sample trades. And for that, actually, I need to switch back to my real account. Yeah, let me do this. No, actually we can do the sample trade right now on this one in the demo mode. Why would I switch to my real account? It makes no sense here. So let's open any random trade here. Let's just maybe AVA USDT, why not? So you have upper price, lower price. So this is basically where the bot is going to trade for you. So as long as the price remains within these boundaries, which are defined by the upper price and lower price, this is where the bot will trade for you. And if the price stays for a long time within this trading range, I mean, you can see the bot trading like month, okay? That's something that you can see for sure. But if the price goes above or below, this is where it gets a bit tricky. So if the bot goes above the upper price, boom, let's say it is now trading in this area. If you did not have the trading up on, like you had it switched off over here, so basically you would, like the bot would halt trading and nothing would happen in this area for you. But if you would have enabled the trading up as you launch the bot, then the system, like the bot, will automatically follow the market rally. So the trading range will be somewhere in this area. And if the price goes even higher, then the trading range will follow it automatically. So that's another cool thing about Bitsgap, is that we have this trailing up, which enables the bot to follow the market rally. So maybe you entered the market when the price of Bitcoin was 10,000. And maybe you just forgot to check the bot, or I don't know, you just were away from the laptop for 3 months, for example. And once you come back, you see the price of Bitcoin at the area of $60,000. And thanks to the trading up, the bot would still trade for you. So you would not miss this big rally from 10K to 60K thanks to the trading up. Okay, so that's the trick for you to use if you want the bot to continue trading even if it breaks the upper price. Okay, use the trading up to follow the market automatically. Okay, so let's just launch this one. I don't care about the settings, I just want to show you the metrics that we get here in the spot bots. So here we go. The market order field. Now we are in the market. You see all the sell limit orders and buy limit orders, they are set right on the chart. And you can also see them over here, open orders. So you know exactly at what price the bot will buy and at what price it's gonna sell. The exact amount it's gonna sell and the exact price at which it's gonna sell. Okay. And you have this column known as the bot profit. So that's the profit generated in the quote currency, which is the second coin in the pair. That's USDT here. So if you trade AVA to BNB, then the bot will generate returns in BNB in this case. If that's Ethereum, then of course it will generate returns in Ethereum. Okay, that's the thing about the bot profit. The investment change stands for that's the key metric here, because it takes into account the bot profit, and it also takes into account how the value of the base currency, which is AVE in this case, has appreciated or depreciated by today. So we click here, you see that we are exposed to the value change of 15.4 AVEs. Okay, so that's our risk exposure right now. If the value of our 15.4 AVEs drops, then that means that the value of our investment will be affected in this case. And we see the amount of quote currency in open orders also, and the total position in this case. So you can see that it's now about 50%. So we are exposed to around $6,000 worth ADE. So in this value, like the number of AVEs you have in the base, in open orders, it always changes because the bot buys and sells. You see, now it just initiated buy order, and you will notice that now the amount of AVEs has slightly changed as well, because we purchased this amount of AVEs. Okay, it's now we have more AVEs in the base. Now our risk exposure is a bit bigger than the one we had like 20 seconds ago. So this is always, like, this metric always changes because it buys, sells. That's a never lasting process. As far as the price stays within the trading range, you will see your ratio between the base and quote, it changes all the time. So that's why your risk exposure changes. But like, to make it simple, the key metric for you to monitor is the change. If it is green, like plus 2%, plus 10%, now like you are safe, in a safe zone, everything is fine. So all things taken into account, you are making profit. Once your investment change is red, like maybe minus 5%, then yeah, that means that you are bearing a loss right now. So that's the thing about the key metrics that we have here. You also have the average daily return, which you can use to compare strategies with one another. So for example, you might have 0.6% here, whereas on another bot you have maybe 1.2%, and you wonder what makes them different, why this one is lagging behind, why it makes only 0.6% intraday, whereas the next one I have makes 1.2%. So you look at the metrics, you see what was the investment you allocated, what was the grid step. So you take all these things into account to find your golden strategy that brings you the most, and also to find the golden basket of your cryptocurrencies that bring you returns. Okay, you can have the basket of your top performing cryptos, basically those coins that you prefer to trade because you know them, you know the fundamentals that are driving the price of these coins. You don't have to trade every single coin because there are so many of them. Just find the list of your favorite ones and trade them, and experiment with different strategies trading these coins to find the ultimate strategy that works for you in Bitsgap automated mode. So yeah, you see the bot is now trading. You see this green circle which represents the executed buy order. That's another cool thing about Bitsgap, is that you can see the performance of your bot right on the chart. You don't have to go here to see the closed orders. So you have it here on the chart. Okay, you just log in. Maybe tomorrow you want to check the performance of the bot. You just log in and you see that, yeah, it pretty much made like boom, 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 20 trades. So you say, yeah, that's fine. That's okay for me. And then you look at the average daily and you see that's around maybe 1%. And you say, yeah, that's good. 1% to my investment. That's a pretty decent return intraday. So yeah, that's something that really takes you just a few minutes to scan the performance of your active bots. Maybe you want to get rid of some because they turn out to be ineffective, and you will use another strategy which maybe will bring you more returns. So yeah, speaking of different strategies, we have the S bot and the classic bot. And the S bot, and we also have many articles related to the S bot and the classic bot in the knowledge base in the blog, where you can find what exactly makes the S bot different from the classic bot in terms of investment distribution logic. I mean, the only thing that makes them different is how they distribute your investments and how they buy and sell crypto. But basically they look the same. You see sell limit orders, buy limit orders. You see literally just nothing changes here. Okay, you also have these grid levels for both this S bot and the classic bot. I mean, the only difference is in the investment distribution, and sometimes the way classic bot distributes your investments works better, and sometimes the way the S bot proportionately distributes your investment works better than the classic. So as a rule of thumb, and I really want to make this simple for you, there is a rule of thumb. If you expect the market to go sideways like this, like in the range, like in the horizontal range, you see, this is where you should stick with the S-bot, because statistically the S-bot has proven to be more successful on the sideways market. And the best way to remember is the first letter is S, so you can think of it as the sideways market, so sideways bot, S-bot. So stick with the S-bot whenever you anticipate the market to swing within the sideways market formation. Okay, so that's it. That's the thing about the S-bot. You see, on this time period, S-bot would bring you more returns than the classic bot. Okay, as of the classic bot, if you expect the market to rally, to move like this, boom, then stick with the classic bot and don't forget about the trading up. I mean, I always recommend to switch on the trading up, both for the classic bot and for the S-bot, because why? You never want to skip the market rally, right? You don't want to be out of the party, right? You always want to be in the party. You always want to make the returns, and that's why trading up is the cool thing. It always follows, I mean, it lets the bot to follow the market rally, whether it's the classic bot or the S-bot. Trading up is a saver. It maximizes the return and make sure that you stay in the market as it goes higher. That's the cool thing about trading up. So on, like, if you expect the market to rally like this, and you have the trading up with the classic bot, that's the ultimate profit maximization that you can achieve in this configuration. Okay, so that's the best you can take from AVA trading to USDT. If you think it will move like this, you switch, like you set the classic bot, you don't forget about the trading up, so that's will be your ultimate profit machine for you in this case. So yeah, once again, S-bot is for the sideways market, the classic bot is for the rising market. Now we should talk about the Hodl strategy, and let's quickly go back to the presentation. So the Hodl is the easiest one, the one where you test most of your luck and the most insecure strategy that you can possibly find in any market, like in the stocks market and forex market. But at the same time, it's the most rewarding one. But as rational traders and rational investors, we don't want to risk the entire balance, right? That's why we always stick with the smart trade and automation and only allocate a certain percentage to Hodl. And my golden ratio here is 50% to automation, around 30% to smart trade, and around 20% or even fewer to Hodl, because Hodl is the most riskiest one. You can lose here everything because the price of crypto can go to zero, and we have so many cases where different coins, they just gone to the zero area. That means that as an investor or trader, you would lose your entire position. Yeah, so Hodl implies that you don't have the take profit, you don't have the stop loss. Here, you just buy the crypto. Let me just show you on the chart here. So let's say you bought it here. Let's use the horizontal green line. Yeah. And then you just do nothing about the coin. It just stays in your portfolio and you do nothing about it. So you hope that one day you open the chart and you will see the price of BNB trading at, let's say, 474. But this can happen maybe in 2 years, maybe in 1 year, or maybe even tomorrow. You never know. It's always about luck. But what you can also see is the price of the coin going to zero. Okay, so that means you can lose everything. So that's why I think Hodl is once again the most insecure, but since it's the most rewarding one, and we know so many stories of people who purchased Bitcoin when it was around $200, $500, and they forgot about it for like 2 or 3 years, and now you see the price is trading so much higher. These guys, they made fortunes here, okay? But this is the pure luck here in this case. Rational traders and investors, they always care about their investments, and they don't want to see their positions going to zero like intraday. That's why smart trade, automation, the best one is like this, the most where you allocate your investment, because there you have the best risk control and all the tools to maximize your returns. Okay, so that's why my golden ratio here is 50% automation, because that's the easiest one that brings you steady daily returns. The smart trade is where you can create your golden strategies, and sometimes just by allocating 30% to the smart trade, this can outperform the automation if you are experienced enough. And that's why we allocate 30% here, and 20% goes to Hodl in this case. Okay, so I would never recommend allocating more than 20% to Hodl, but it's really up to you the way you trade. What I'm trying to explain here is that we have 3 strategies at Bitsgap that you can implement. That's the automation, smart trade, and Hodl. And by utilizing this golden ratio of proper diversification, and in my case that's once again 50%, 30% and 20%, this brings you the biggest return in the crypto market as of today, guys. So always remember that risk management is the key to success. That's the only thing that really matters in trading. And just make sure to sharpen your technical and fundamental analysis skills in order to find best entry and exit prices on the market. Okay, so use these tools as like the one I have here, which is the volume profile or moving averages, to analyze the market sentiment, to analyze whether the trend is strengthening or weakening. So these are actually not the only tools you can use. You have the RSI, you have MACD and many other tools. You can use the combination of them. It's really up to you how you use. And we also have other platforms that have interesting analytical insights. They analyze the demand and supply on the market, on the futures market, so you can really see how the money is flowing in the market to see whether it is about to go higher, or basically traders are retreating now and maybe it's not the best time to trade this market. Maybe it makes more sense to wait for some time to see how the market sentiment changes. So there are lots of tools how you analyze the market, and thanks to Bitsgap you have all the tools to seize these market opportunities with automation, with smart trade, and a simple Hodl strategy. And you can monitor your Hodl in the portfolio here. So you see the coin, you see the price, and you see how it has appreciated or depreciated since the time you purchased it. Okay, so once again, portfolio is for Hodl, bots is for automated trading, and trading is for smart trading in this case, where you have this limit buy, stop limit, and some other interesting tools which you can use depending on the relevance and your experience. I would highly recommend to start with limit order, then go to stop limit, and you can actually mix the stop limit with limit, and only then try things like the TVAP to figure if it's also the order type that you've been looking for or not. So yeah, that's the thing about free golden strategies that we have in crypto as of today. And by properly allocating your investment to each of this strategy, you end up having your ultimate diversified portfolio, which brings you the highest return as you take the lowest risk possible. So that's the thing about trading. Let's see what are the questions that you have so far. I'm gonna select most interesting. So yeah, why do I end up with less money even though the bot says there was a profit? Is it because of the market change? Yeah, that's actually the trick for many users. They got frustrated. Oh, well, actually not the one. Yeah, let's go to this one. You say you can see your investment change, let's say -5%, whereas your bot profit can be plus 10%. And I mean, the bot profit is always green. You won't say it red because it always makes money regardless of the trend direction. Even if the price rises or moves sideways or even falls, you see the bot is able to find these small trade opportunities. You see these market swings. It can buy low and sell high, buy low, sell high all the time, regardless of the trend direction. So that means that bot profit is always positive here. Though the investment change as the key metric is the only thing that matters, and you can see this metric in the negative zone. So you can see once again -5%, for example, whereas the bot profit here can be, let's say, 10%. So that means that the value of Aave has depreciated so much that despite the return that the bot made, this return is insufficient to cover the loss that you incur as the value of Aave depreciates. But still, the trick about automation is that even on the downfall, you will see that you generate more returns. Basically, you lose less than in a simple hodl or maybe even in the smart trade mode. Because the thing is that it takes the bot profit to offset the negative value change of the base currency. You see here, the value of quantum falls. Yeah, and if I would just hodl it from that point down to current price, I would bear a loss of -6.88%. But thanks to automation and thanks to the profit that the bot made on this downfall, this profit offsets this negative value change, and that's why I incur the loss of only -3%. Okay? Which is significantly lower than the loss that you have in a simple hodl strategy. So that's the clear advantage of automation, is that even on the downfall, even if you were wrong about the price direction, and unfortunately the price moves in the opposite direction, even in this case, the bot can minimize the loss. And thanks to this dollar cost averaging effect, as it spreads the risk over many limit buy and limit sell orders, and that's why on the downfall and as the bot trades, the net change is better than the one you get in hodl on the downfall in this case. So yeah, once again, you can see your investment change, like for example -3%, even though the bot profit is +2%. That's because the value of base currency has depreciated. That's the only thing that affects the difference. So yeah, So 3 key takeaways from the automated trading is that on the downfall, it minimizes the risk. On the rising market, it can steadily generate returns without your intervention. So you don't have to spend hours in front of the computer. You can do other things in your life. You can spend your time with family. You can spend your time on your hobbies, whatever. It's just that it takes you like 3 minutes to configure the bot, and then it will just do the job for you. It can trade months, it can trade years. I mean, we've been here a long time, and on my another account, I have some trades that are still active for like 9 months or something, and they are still trading. So that's the cool thing about automation at Bitsgap, is that they generate steady returns every single day. And you can analyze this here. You see all the bot statistics, you see the daily return. Well, since we just launched it, it has insufficient amount of data to provide us with more insights, but still, you see it already started to generate some metrics for us, and you can see the average return it makes, and you will see the daily return, and of course you will be able to compare these results with other automated strategies that you have in order to find your golden automated strategy. Okay, and the trick is, by the way, you can simultaneously launch different configurations on one cryptocurrency pair. So for example, you see here I have AVE trading to USDT, and it says you cannot start several bots on the same trading pair. But the trick is to trade Cardano, oh sorry, that's not Cardano, that's AVE, to trade AVE to other stable coins if you find on Binance. Let's see if we have AVE trading to TUSD. No, we don't have it. Maybe BUSD. Yeah, we have AVE trading to BUSD. So that means that you're still trading AVE, but it just that you have a different stable coin, but that's pretty much the same as BUSD or USDT or TUSD, whatever. That's the trick you use to launch simultaneously different configurations, but on the same crypto, which is AVE in this case. So you, for example, you want to launch the classic bot on AVE with only 100 grid levels, blah blah blah. You go for it, and then you go and you open another trade, but this time it's going to be to USDT, and you said maybe the S bot, also 100 grid levels, the same trading range, and you can monitor the performance of these two strategies trading on one coin to see which one brings you the most. Okay, you can also launch different classic bots on one crypto, but for example, one classic bot can have 50 grid levels, another one can have 100 grid levels, another can have the maximum, let's say 180. Okay, so clearly it's up to you to use all these available tricks and instruments to find your ultimate strategy. So, and thanks to this analytics, you can compare bots with one another to find your ultimate configuration. Okay, so maybe your ultimate configuration is only to trade classic bot, which has 70 grid levels, and the average investment maybe 400. Maybe this is your ultimate strategy. Okay, because this also depends on the crypto that you choose, because the volatility is different depending on the crypto that you choose. You can say that one coin moves 5% intraday up or down. You can see another crypto, maybe random one, let's say that's BitTorrent, and BitTorrent moves 10% intraday. You see, the volatility really matters in automated trading, because the more the more volatility, the more opportunities the bot has to buy low and sell high, and that means different configurations should be used on coins that have ranging volatility. Okay, So find your ultimate strategy, and you have this sandbox here, which is known as the demo mode, where you can play with the market as you want to find, like, to use all these instruments to find your ultimate strategy before risking real money. That's the cool thing. So let's see if we have other interesting questions. Yeah. So yeah, there is a question about the trailing stop loss in smart trading. So the thing about the trailing stop loss is that, for example, let's say you set your stop loss, and by the way, you set the trading over here. So this is where you set your stop loss with the trading enabled. So let's say you want to buy at the current price and you want to set the stop loss for AVE, maybe in this area, 363. Let's make it red. And then imagine that the price, and let's use the ghost feed. Imagine that the price goes here. So now we are trading in this area. And since we had enabled trading for the stop loss, that means that the stop loss will automatically follow the rally, and it will maintain this gap as we had at the time we launched the bot. So the gap here is, let's estimate, 6.96%. That's the gap we set. So the stop loss was down by exactly 6.96% from the entry price. And as the price goes higher, it will maintain this same gap. So that means that you will see your stop loss somewhere in this area. So now, relative to the first price where you had your stop loss, now your stop loss is slightly higher. And moreover, your stop loss, this one, the actual one, is not only higher than the previous price where it was, but it is now above your entry price. So that means that now your stop loss here acts as a sort of take profit, because if the price falls, it will trigger it and you will exit the market. But since your stop loss is higher than the entry, that basically is your take profit. Okay, so this ensures that you won't lose, that at least you take something from the market. So once again, at some point, the stop loss is just the stop loss as far as it stays below the market price. But once you see your stop loss trading, once you see the stop loss above the entry price, it now becomes the take profit. So that's another cool thing about trading stop loss, because it changes its role depending on the market action. Okay, and it acts as a tool to minimize the loss as you start the trade, and then it acts as a take profit to secure your returns. I mean, that's the pure magic just by using one instrument with a trading enabled. So that's what makes stop loss with the trading enabled so unique, and that's why it really just takes time for you and experience to figure out if you need to use the trading or not. Maybe there are some only special cryptos where you want to use the stop loss with the trading enabled. And on some you prefer not to. You just prefer to use an ordinary stop loss, which stays where it belongs. It never follows the market. So it's clearly up to you, and you have all these tools available at your disposal to find your ultimate strategy. Okay. And same applies to the stop loss in automated trading. If you have both the trading up and the stop loss, that means that the stop loss will follow the trading range, maintaining the gap. So it works the same way as it works in smart trading, when you have trading up and stop loss both enabled. So automatically, as you have your trading up enabled, stop loss becomes trading stop loss. So that's the thing for you to remember. You might have forgot about it, and maybe you haven't thought of this, but yeah, this is how it works. It becomes trailing. It follows the price rally and maintains this gap between your trading range and the initial position. Of course, you also have this list of recommended strategies. If you don't know which crypto to trade, then based on the backtest results, and let's quickly switch back to the real account where we have the actual data from the real market price action. So you see that, let's switch to Binance. Yeah, so based on the monthly backtest results, the coin of White OM, actually I don't know this, I have no clue what these coins are all about, the Cocos, okay, whatever, but yeah, these are the top performers. So the bot would make 39% if you would have launched it 1 month ago on this crypto coin in the quote currency. So you would generate 39.52% in USDT relative to your investment in this cryptocurrency pair. So you can use this sidebar of recommended strategies as a sort of source of trade ideas. Like, you don't know which crypto to trade, but you see these coins and some might be familiar to you, and you see that this familiar coin made 35%, and you go like, wow, that's cool. I mean, if it made 35% in a matter of 1 month, most likely it will make more than 10% next month. I mean, it doesn't mean that if it made 35% this month, that it will make the same exact percentage next month. Of course not. You don't know what the future is gonna bring to you. But still, since it made 35%, you are now pretty confident that this coin is interesting for the market, because otherwise it would be impossible to make 35% on this coin. It means that this coin is highly liquid, and that traders and portfolio managers are trading this coin, and that makes sense for you to at least consider it for a trade opportunity, because if it made 35%, most likely next month it will make 10-15% or something. Yeah, but I mean, it's not guaranteed, but still use this as a sort of benchmark for your future projections. That's the cool thing about recommended strategies, and you can sort them by weekly or daily results. Okay, so yeah, don't forget to follow us on YouTube, where we post recordings of some previous webcasts, and you will find many insights in previous webcasts where I cover automated trading in more details. And don't forget to go to Bitsgap blog to read about some strategies that you can use in crypto, some key takeaways, some tips and clues. Like, for example, there are 2 blogs I remember I made related to automation. Yeah, here they are, the part 1 and part 2. So here you can find the exact configurations based on the patterns, which you can use to trade crypto. You see the exact configuration of the trading range that you can use based on this pattern. You see all these metrics here that you should opt, they are provided, so you can at least consider them to play with, and ultimately you will find your best one. Okay, so another blog, other strategies that I cover, you will find it there. So lots of useful things. Broaden your trading knowledge by reading blogs. Only key takeaways, nothing else, just key takeaways. Literally takes you a few minutes to read. Charts provided, summary provided. So yeah, here is everything for you guys, literally. So once again, YouTube for video content, subscribe, smash like button, and the blog to read, to find those top insights that you can use when trading smart mode, when trading automation, and when trading simple hodl. Okay, so everything here is for you, and of course you can always ask your question here in the support, and you can also follow us in the Telegram, where you can join the active community that we have there. So you can ask your questions there as well. You can share your experience. You can exchange your thoughts. So yeah, we have a pretty friendly community, and yeah, waiting for you guys to join if you are not there yet. So yeah, that's basically it for today. I hope you enjoyed the webcast and you got this key takeaways, like which is the strategy you should start with. And I mean, if you've never traded bots, then clearly you have all the tools at Bitsgap to figure out if this is something for you, because you have virtual money there in the demo mode to trade with, absolutely risk-free. And in the smart trade, we have all the best order types to create these perfect combinations to maximize and minimize the loss, and yeah, to maximize the return and to minimize the loss. Yeah, sorry for this. And of course, the portfolio to monitor your hodl strategy. Just buy the crypto, hodl it, and you see all the metrics like the return on investment, daily, weekly, monthly. So everything is there for you guys. Find your ultimate strategy, and once you tried all of them, and once you sharpened your skills in all of these strategies, you can now use all of them in a golden ratio. Like, as I said, 50% automation, 30% smart trade, and 20% hodl. That's my golden ratio. For you, this can be different, but still, the idea is pretty straightforward. You have these 3 golden strategies that actually work in crypto. Just use them, or mix. Just play with them. So that's up to you. Again, thanks a lot. I really appreciate your time. Sorry for being a bit late today. This, I promise, won't happen ever again. Well, unless something happens to me, of course, but yeah, I hope not. Anyway, stay safe, peace, love, and I wish you profitable trading. And I hope to see you next Thursday, where I will show you the futures bots that we are about to release, where you will be able to not only go long to generate returns on the rising market, but to generate returns on the downfall as well, using the short sell logic that we have enabled in futures trading. Yeah. So anyway, this is going to be the topic of our next webcast. See you next time.